Hey everyone, this is Travis, Trader Travis here, and my co-trainer Peter. And what we're doing is a new idea we came up with, where we're going to kind of have like weekly accountability check-ins, team meetings, however you want to say it, where we're going to kind of go over our trades, what we're looking at for the next week, what trades we're thinking about placing, as well as our thoughts on the market. So let us know if you want something like this. We'll try to keep it short, 5 minutes or less. Sometimes Peter and I like to talk, so sometimes we may go over, but let us know if you want more like this. Now, with that being said, go ahead, Peter, take the floor is yours.
Okay, so I'll just cover where I'm at in my trade. So I'm basically, you can see on the screen, this is my paper trading account. Right now I'm managing basically 4 different accounts. So I have 2 paper trading and then 2 real accounts that I'm managing. So I'm just going to cover where I'm at. What you're seeing in front of you is based on the new strategy we talked about in the live call and the videos that Travis put out. And actually the 2 videos he just put out yesterday, I think it was, right, Travis? Yeah. 2 new ones that kind of answer a lot of questions. But I'll just go through this real quick. You can see there's 3 different here. I have Macys, QQQ, AT&T, and then VXX. Now VXX was my mistake one. You can see at the bottom, I sold a covered call at $30. It's in the money. It expires today. It's going to get exercised. That's what I wanted. I'm going to take a loss on that because we wanted to get out of that. That was a mistake. AT&T still has 7 days, so nothing to really manage there. We just we set it and forget it. You can see that's a covered call because I have 2,200 shares of AT&T. I was assigned last week, so I did a covered call on that. QQQ has 7 days. The way it's been going, who's to say what would happen, but again, doesn't matter. Macys is another one. So Macys has actually turned out, I did this one a little different, kind of what you were talking about, Travis. I bought a protective put. You can see it at the bottom. It's a $37 protective put. It's got 210 days into it. It's already, if you add up all these premiums over here to the right, I'm pretty sure, I can't remember exactly, but it's pretty close to those premiums have already paid for that protected put. So everything I do in the future is all revenue at that point. So you
gotta love it.
Yeah, actually, you know what? Now that I think about it, that's right. So you can see I have a 3650 covered call. It's in the money. It's going to sell today. The good news is I bought Macys at 3650. I was assigned at 3650, so I take no loss there at all. Okay. That's just a straight wash. And then if Macys continues to do what it's doing, this next one here, which is next week, will probably expire worthless. But again, we'll just rinse and repeat. Now on the flip side, let me change accounts here. This is an IRA account so this is just how the Thinkorswim platform does it, right, when you do paper trading. But I actually mirrored this kind of to my larger 401k account. Okay, so the numbers aren't exactly what you guys are seeing. I'm not going to tell you my actual numbers, but I'm basically the way I did this was I wanted to be able to trade on 2 different styles because I don't use the entire account value to trade that strategy. And in this case, what I did a little bit different. I used NVDA only. And so what I did, I may have inadvertently messed this one up though, but we'll see how it plays out. And that's the whole point of this, you guys. So real quick, I bought a protective put initially. That was my very first transaction. I bought this 255 protective put. It's got 336 days. And then I went out every week and I sold a 252 put. And you can see the revenue. So I'm right now, I marked this down, my total revenue on all those cash secured puts is $2,300. So my protective put cost me $3,200. So I'm almost paid for. Okay. So by next month, after this last one expires off, everything I do from this point forward up to 21 June 19 will be all revenue. Now, there's something on the flip side I didn't think of when I threw this all out there, because if you notice, I didn't skip weeks. I did them all consecutively.
Yeah, you can do that. I showed you both. I think I showed you both approaches.
You did.
If not, okay.
You did. But I wanted to stick to the other one like I did on Macys. But not a big deal because I have protection. And I actually like this. I'm getting more and more comfortable with the protection. So Well, just because at first you look at it and it's expensive, right?
It is expensive, yeah.
But if I'm ever assigned and NVIDIA crashes in price, I have no worries, because if
Yeah.
you notice too here, all my assignments will be at 252. My protective put is at 255. And the reason I did a 255 is because I couldn't buy a 250 protective put. I could only buy a
Yeah.
250
And when
or
it
a
goes that far out.
255.
Yep.
That's right. So I'm like, well, I'll do the 255. And then actually, if you notice here, on the 17 August, I sold a 250 cash secured put. So best case scenario on this one, if NVDA over the next month continues to go up, then I'm just going to generate a ton of revenue on this one.
Yeah.
And then I can't show it to you because I would have to, I can't log into both my paper trading and real account at the same time on a Mac.
Yeah, on the Mac.
So yeah, so I'll just tell you, on my real trading account side, I have a small account at $5,000 that I started because I wanted to show people how you can still do this strategy on a small account. So today I traded.
You can.
Yeah, today I traded a Macys 3850 put for $52. That's what I got, $52 for that. It expires next week. If I'm assigned, it doesn't matter because I have more than enough cash in the account to cover the trade, and then I'll just do covered calls on it. And looking at Macys covered calls, they're generally a little bit higher, which is weird. Usually the cash secured puts are higher, but the covered calls will be somewhere in the $70 range.
Wow.
But we'll see how that plays out if I get assigned. But again, this one I did not do protection on. And that's kind of what we were talking about. But I'm not as uncomfortable with it here because I'm doing just one contract. I don't know why. It just seems a little bit more comfortable to me.
To me too. It's two things. Is where we're at, and you have to factor in what other people are at. One, it's one contract and it's a small account, so we're like, no big deal. But for people, if that's all they have, it's going to feel like a huge account to them, and so they're going to be scared to lose it. They're like, it took me years to save up this money. They're going to be scared to lose it. So we just have to factor in those two paradigms. For us, we're like, well, because you're used to trading with bigger numbers. The $5,000 is almost like, whatever. It's like 2% of my overall, so it's like, if that makes sense.
Yeah, I think that's probably how I'm seeing it. Although I don't want to lose $5,000.
No one wants to lose $5,000. Yeah.
But this is really, we've talked about it. The possibility's there, but it's a very remote possibility because when you look at the grand scheme of things, even during the Great Depression, stocks didn't go to zero. No. And it's not like these companies that we're trading are penny stocks, number one, and number two, really bad companies. These are companies that a lot of institutions trade in, and that always gives you protection because institutions will always protect their bottom line too. So
that's true.
And then the last account is that's my wife's IRA account, and that I have an AT&T cash secured put that's going to expire in the money, so I'll get assigned. So that'll actually we'll now own 400 shares on that side, which is good, and then I'll sell a covered call on that one. And then I also have a QQQ that's going to expire worthless because we sold it last week at 175, I think, whenever that was, and QQQ's up around 178, 179, so we're good. So again, we'll rinse and repeat that one on that side. So overall, we're about on my paper trading side, I'll bring up can you see my Excel spreadsheet?
Yep, I sure can.
Okay, so there's my totals. You can see at the top. So from June 21st, that's when me and Lauren started this. We generated so we generated $7,000. Now that's not accounting for this over here. You can see my loss in VXX. So I'm going to lose $5,100 in VXX. I didn't have to do that, but I decided to do it just to get out of it. It was a mistake. It's on paper, but even with that loss, we're still up $1,900 in just, 3.5, 4 weeks. So not too bad.
Yeah. Well, of course, your daughter's a college student, right? So
Right.
that's a huge amount of money for a college student. So
Absolutely. But it kind of gives her, and if you look, you can see we've only, based on what we're doing in paper, we've only risked 46% total in stocks,
that's awesome.
if assigned, so that's a lot lower than what
Yeah.
most people are doing. Most people are putting 80% in stocks.
Yeah. So let me translate that to the way I hear it. You pretty much made my former corporate salary. That's my former monthly corporate salary by clicking a few buttons, and you're only risking half of what you could use. So half of your account is sitting safely in cash for other
Right.
strategies and things like that. Yep.
Absolutely.
Yeah.
So,
Awesome. Well,
so
great
that's
job,
where I'm
Dad, teaching your
Thanks.
daughter.
Thanks.
So that's awesome. Training them up in the way they should go.
Absolutely. Yeah. And you know what, that's the whole point of this too, right?
hmm
You learn it, and then it would be stupid not to teach my kids the same thing. So,
Yeah. Yeah. Exactly. All
all right,
right.
let me
Is that all,
stop
my
showing.
friend?
Yep.
All
I'm
right.
going to
So let
stop
me.
showing, right? I got to
Okay.
stop sharing my screen.
Yeah, I will make myself the presenter. Can you see, make me the presenter? Let me show screen one. Oh, I have an option to show both screens. I don't think I'll do that.
Yeah, I can see it now.
All right, great. All right, so I have it. So I'm going to be looking to the left of the camera or to the right, probably for you, because I have my charts on a smaller screen just so the recording won't look so wacky. So I'll be swift here. Peter covered most of what I'm also doing, so I won't, uh, you know, pound those strategies in the ground. We're both pretty much, we're selling stock insurance. We're putting in offers to buy stocks. And so is what Warren Buffett does, the world's richest investor. Like one set of most people think he hates options, but if they really look at his filings and read his reports, you will find he trades options. In one set of options, he brought in, I think, $49 billion. So he's a billionaire. Some of that billion is coming from option trading, right? But you have to study that. So anyway, it's like a 2 or 3 step process where step one is we are putting in offers to buy stocks. We get paid to buy stocks. That's the Buffett strategy, just modeling him. The second portion of this is if we actually have to buy the stocks, then we rent them out. That's why I call it. I'm not going to use the industry terms anymore because it just confuses people. The way I'm teaching it to my wife and my 6-year-old son is that, hey, just like we rent out homes, we can rent out stocks for income. And that's exactly what we're doing. It works the same way. Sometimes people want to buy our stock, buy our home. Sometimes they don't. If they don't, we just rent it out again. And then the third portion of this is, well, it's 2 variations, but the way I'm doing it is I'm buying protection. I'm insuring my house. We have insurance on my home. We have insurance on our stock. So that way, we can never lose 100% of our money. Worst case, I might lose 10%, but that's a lot better than losing 50% in the market crash. So that's what Peter just covered, that strategy. So now what I'm going to do is just kind of talk about the market, where I think the market may head. I am also doing it on AT&T, which Peter talked about. So I am renting out my stock shares to other people, giving them the right to buy my stocks away from me if they want. The stock is falling right now. They don't want to buy a falling stock. That's cool. I get to keep their rental income. So that's what I'm doing on AT&T. I have one that just expired, which means my rental lease expired. The renters are moving out. They're like, hey, we don't want your stock. It's falling in price. I'm like, cool. Let me rent it out to the next group. I'll probably bring in, I'm going to try to target about $900. And this is weekly income. So that's that. That's the one stock I'm doing that on. And here's the general market here. The general market, I am going to publicly, I'll say that I publicly declared that I thought the market may crash around November. I don't think that's going to happen anymore. And now it's July of 2018. It's not enough greed, or people aren't giving me stock tips. That's what I'm looking for. So I think the market may continue heading higher for another year. So we'll see. I'll be on the ear for like irrational greed, but this year it may end either flat or slightly down based on the volatility we've seen so far. It's been very volatile. I don't really trust it. I don't trust it to rage higher like it did in the beginning of 2018. I can't see that happening again, but as we always say, the market doesn't care what I think. So I'm just cautious. Right now, I'm being very cautious, very picky. I'm only picking the highest quality stocks that I really, really trust in. Home Depot is one. Their earnings are great. They've been making money for the last 4 years. We sometimes cross-reference our stocks with Investors Business Daily, so you can look up these stocks in there, and they rank them by earnings and how well they're doing in their industry and overall. Costco is another one. That's a stock I'm targeting. I made a couple of trades on those yesterday, as a matter of fact. They were bringing about, in total, maybe about $1,000 over the next 30 days. Those are the two major ones I'm targeting. There are a few others, but I don't want to point them out. Those are my two favorite out of all the stocks I looked at. But that's what I'm doing now. I don't trust the market. It's too volatile, too back and forth. So I'm being very picky with the stocks I'm trading, and I'm only trading 1 to 2 what I consider high quality stocks until the market starts settling down and being more reliable. Right now, it hasn't been reliable. It'll go up, you get excited, and it'll just reverse on you. So I don't want to get caught in all that. So that's my analysis and what I think is going on. Do you have anything else to add, Peter?
No, and I think that the only other thing I would add, I guess, is if you looking at the stock market right now, you can see it's almost repeating the pattern it just did back in May, right? So you can see how prices went up, the two moving averages got away from each other, and they came back together, and that's we've talked about it, you've talked about it a million times. That's everything reverting back to its mean, and that's kind of what it's doing. So you can see slightly trending up, but I look far left to February, and that's where the market crashed, right? So that's my resistance point. So that's where I'm cautious as well. I look at that, and I think we're getting close to it. It's when you looked at that line right up over there. Yeah. So
yeah, and resistance is just a price area where stocks have trouble at. It's not the line I drew. The line I drew helps focus our eyes on the price area. It's just an area. So when stocks get around this price area, which where Peter said is right around where they're at, we start being cautious. We're like, let's see if they can prove themselves to pass through this area, because whatever reason, it's been a psychological barrier for people, and the stocks haven't gone past that area. All right. Well, that's it, my friend. Let's stop the recording here. And then again, everyone, if you all want more, our little accountability sessions, kind of our talks, let us know. We can schedule this every week or every other week. Just let us know in the comment section wherever this video is posted. You all take care. Have a great week. And we hope to see you in our tribe one day if you're not already there. And if you are a part of the tribe, stay engaged. You're not doing this alone. Please, we're in the members area Monday through Friday. Hey, just reach out to us. Let us know what you're doing. Share your successes as well as your struggles. All right. Take care. Talk to you soon. Bye-bye.